Okay, so welcome to this new module where we are finally going to get stuck into the entry models, which I know for a lot of you is the exciting part for some reason. But really, before we get into that and we start really digging into the specific trade plan rules, you need to understand how we correctly build the narrative, which is really what we've been doing the whole way through the technical analysis module. And I'm going to keep going over it because the entry model, and you're going to hear me say this a lot, the entry model is simply a timing mechanism for your medium time frame idea and your medium time frame POI. That is it. Okay, so the most important part of this entire strategy by far is making sure you have built that overall narrative, right? So you are on the right side of the market, the correct direction, and you have got your POI selection. Okay, we don't just trade every single valid supply and demand zone on your medium time frame. No, we want to be trading the most highest probability ones, the ones that are in line with the narrative, the ones that make sense, the ones that have the risk to reward on our side. So these first 2 or 3 lessons of this module is going to be focused heavily on that. Okay, it's not going to be anything, well, no, you have seen some of it, but like we'll get into it and you'll see why before we actually look at the entry model itself. Okay, so if you're ever in the future struggling with the strategy and whatever, you need to come back to these lessons because this is really what is the whole key of having success with this strategy. Okay, so if you watch the previous lesson, I think will be the last lesson of the technical analysis module. This is where I kind of try to simplify things and summarize it for you, where we're talking about, right, the market structure is the first thing we do. It gives us our overall directional bias. Okay, we're looking bullish and we want to try and capture that next bullish leg to the upside. Supply and demand zones are what gives us a location for where we want to time that directional bias. Okay, and then we use liquidity as well to kind of time when the actual entry is ready from those areas of interest. Okay, so this was quite a simple diagram when it comes to structure because we were just looking at one time frame and we're just looking at one type of structure. So imagine it's your swing structure, but obviously we know in reality we use multi-time frames, we use 3 time frames, and we use 3 types of structure within that. So obviously it can get a little bit complicated, okay? But remember, we are always using the medium time frame to give us our immediate bias, the immediate direction, and the POIs that we're trading from. So I always need a medium time frame POI mitigation. I need one of these zones to be hit before I can look for my lower time frame entry, okay? So this lesson is going to be going over the high level trade plan again, okay, where we looked at the 3 types of, we looked at the medium time frame. We looked at the 3 time frames that we use. And then in the next lesson, we're going to look at what's called the medium time frame phases, okay? And that's going to help you a lot more when you're thinking about just the medium time frame on its own. So just to say that again, this lesson, we're going to go over again how we kind of think about multiple time frames together. But then the next lesson is when we're going to really dive deep into just the medium time frame. And we're going to look at the different phases of the market with the 3 types of structure. It will all make more sense when you go into it, but it's super, super key you get this. So we covered this at the start of the liquidity module. And really, this is when you just think of the 3 time frames. So you've got your higher time frame. So if you're taking more of a swing approach, that can be like your daily, your daily or 4 hour, or with the day trading approach, I'll still use the 4 hour as my higher time frame. Okay, and really all we're doing with this is we just want to know where is the current swing range for our higher time frames. So let's say the 4 hour chart, and are we currently in the pro trend run or the counter trend pullback phase? That's really kind of mainly what we're thinking about when it comes to your higher time frame. So i.e., when we break this structure, if we're trading this part of the leg, this is the pro trend run, and then this part is that counter trend pullback phase. Okay, if we're trading, this part of the 4 hour leg, and then if we're now in this part of the next 4 hour leg, this is the pro trend run phase again, where we're targeting the week high. Okay, that's really as complicated as you want to make your higher time frame. The medium time frame really is the main area of focus, like I keep saying. That is what I'm looking at 80-90% of the time. It's the main chart I'm focused on, when I'm live trading. It's what formulates my ideas, my directional bias, and the POIs in which I'm trading from. Okay, medium time frame is super, super important. So when I'm using my day trading strategy, that will be the M15 for me. Okay, so here the M15 is sort of this thin gray line. That is that chart here. Okay, so imagine, let me just redraw this for you. And let's make it 2 thickness. Okay, so this is going to be our medium time frame. So what we can do, like after we get a 4 hour breaker structure, your higher time frame breaker structure, if you drop down to your medium time frame, so let's say the M15, this 4-hour leg is going to be forming bullish M15 structure, right? So we can trade that M15 structure. We can keep following. I mean, it's poorly drawn, but we can try and buy, price come into these POIs, and we can look for that next long. Okay, price pulling back into this M15 POI, and we can keep looking for longs following that bullish M15 structure. Where the higher time frame helps us is it helps us to signal when your medium time frame may change trend, right? Because yes, we're just following this and we can just blindly follow it until it changes. But if we understand that after the 4-hour break of structure, that higher time frame break of structure, we know that the higher time frame pullback is going to kick in, then we are on our toes and we're ready for our medium time frame to change trend at any moment. Why? It changes trend to facilitate the higher time frame pullback. Okay, so yes, we can follow this, but we have to know that, quick targets, because at any point the M15 or the medium time frame can shift trend. So as we come into our high time frame supply zone, right to the left, that's a very good piece of confluence that we can now use as we come into here to anticipate what? To anticipate that high time frame pullback may now be starting, and therefore, yes, at this point, the medium time frame might still be bullish. And if you're not looking at the higher time frame and using multi-time frame analysis, you might just be buying in here, anticipating that the medium time frame is going to take out that high. But then what happens? We know, because we've come into high time frame supply, that this is when the medium time frame is about to shift bearish, right, to facilitate that pullback. So then when we get that, this then becomes our strong medium time frame high, right? It broke the low. This is now the range we're playing within, and this gives us our immediate bias for the day. So when I come to my desk and I can see, okay, medium time frame has had a bearish boss or IBOS. It will depend on the exact scenario. It's different every time in the market. But I will know that this is a strong high. I'm looking for price to come back into my medium time frame supply zone, and I'm going to target this week low. Okay, so I'm just following the immediate medium time frame bias, which is going to be bearish. Okay, and I'm going to be looking for sells from my medium time frame POIs. And what is the objective on the high time frame? Right now, the objective is to play that high time frame pullback. Okay, so you want to find your medium time frame immediate directional bias, and it's going to be bearish because this is the bearish range. This is going to be the highest probable sell for the day, right? Coming into that supply zone at the premium of the range. Once price mitigates our medium time frame POI, only then do we drop down to our lower time frame and we look for our entry models, which we're about to learn in the following lessons. Okay, so you see how you start to build a narrative. Where is my medium time frame structure? It's bearish. Okay, I want to look for sells from supply. That's going to be the highest probable area. So I find my POIs to look for sells. Now, the next layer of your analysis to take your trading to that next level is to understand what is the objective of the medium time frame right now, and the objective is to play the high time frame pullback. That's what we're playing, okay? And that's literally how you will formulate your trade ideas every session. Know the immediate directional bias for your medium time frame, understand what its objective is for the higher time frame, right? It's fulfilling the higher time frame objective, and at this point, it's to play the pullback. And then again, the next session, maybe we get another break of structure on your medium time frame. This is the new range we're playing within. So again, we've still got that bearish range. We look for our supply zones to potentially play that directional bias short. We wait for a mitigation, and then if we think it's a higher probable POI, and if we think we have enough risk to reward to target that low, then we'll look for our lower time frame entry model. It's the same thing every day, and we understand the objective on the higher time frame. What we're doing, we're playing the pullback, right? Now, then when we come into the higher time frame demand, okay, we need to start thinking what? We start thinking that maybe that pullback objective is complete. Maybe this high time frame strong low is going to hold, and now we're going to look for that next high time frame leg to the upside. So if we understand that on the higher time frame, whatever one you're using, that means now potentially we can look to get involved early, and we can look to get long against the bearish medium time frame range, right? Because that would be the last break of structure here. So from a medium time frame perspective, we're in a bearish range. But what do we understand? We understand now that the higher time frame may be now ready to do that next leg. So therefore, the medium time frame may be about to change trend. So if we get like a medium time frame shock, you might want to take longs within here. Okay, even though it's against that immediate directional bias on the medium time frame, you may be anticipating we're going to go here to the upside. Okay, or you might just want to wait. You might just want to wait for that bullish medium time frame boss or IBOS, depending on what it is. Now what do we have? Now we have a new bullish range. Okay, because that was the last boss. So now our directional bias is bullish on the medium time frame. We are aligned with the higher time frame, which is really high probability. So we identify our demand zones. We've probably got one here, one here. Okay, wait for price to pull back. Our alert goes off. Is this a high probable POI? Yes, it's a flip that led to the break of structure. It's probably in the discount. Okay, when price comes into here, I want to look for my lower time frame entry model and get involved. And for some of you who want to have those bigger technical targets, well, now we're aligned with the M15 on the 4-hour chart, right? They're both bullish. We understand the objective is to target that high. Our expectation is that the medium time frame structure will stay bullish until it targets that high, and so on and so forth. Okay, so you guys should be somewhat comfortable. We've covered all of this before in the market structure lessons and at the start of the liquidity module as well. And this is just thinking about, really those two time frames, your high time frame and your medium time frame, right? But one type of structure, really. We're just kind of looking at one type of structure here, wait for our mitigations, and then we look for a lower time frame entry model. Okay, now, as you will know, of course, we have three types of structure, right? Imagine that like this here is your medium time frame swing breaker structure. So this is your medium time frame swing high, and this is your medium time frame swing low. Okay, that's your medium time frame swing range. Okay, cool. Within that, what could we have? We could have medium time frame internal structure, right? And then within that, what could we have? We could have medium time frame fractal structure. So that brings a whole nother dimension to your trading that you have to anticipate. So it can get quite complex, right? Of deciding, do I want to follow the bullish medium time frame internal structure within here and like take these longs, okay? Because this long is counter the swing trend on your medium time frame, but you want to play that swing pullback up into here. And then do you want to wait for a medium time frame chalk and then get involved in here? And then, it can get quite complicated. So what we're going to do in our next lesson is go through what was called the medium time frame phases lesson, okay? And that really, that next lesson we're about to get into is going to be super, super important for understanding, just really bringing your trading to that next level. I'm not going to speak about it too much more because we'll dive into that lesson. But first, the point of this lesson was to think about multiple time frames. So how you think about like your higher time frame and your medium time frame together, right? The medium time frame fulfills the objective of the higher time frame. Hopefully you're kind of starting to get that. We'll go through a trade example in a minute or a chart example. And then the next lesson is where we're going to forget about the multiple time frames, but we're going to focus really deep on how to interpret the three types of structure on your medium time frame. Okay, but we'll get that into the next lesson. But for now, let's kind of look at a chart example of just thinking about your higher time frame combined with your medium time frame. Okay, so